Are we going to gap up on Monday? Probably yes. And if you ask me why we are going to gap up, because of US market. If you are aware what is happening in US market, all three indices, which is S&P, Nasdaq and Dow Jones, have rallied more than between 2%, 2.5% to 1.5%. So that is a positive news. In turn, what happened is GIFT Nifty is also up by around 125 points. So we closed on Friday, we closed somewhere around 22,350. We might open above 22,550, and of course this is hypothetical because we really don't know what is going to happen Monday morning when Asia Pacific is opening. US futures will react, so we will have to wait and see, but probably it is going to open above 22,500, or let's say 22,550, or let's say 22,600 levels. Now if you had shorted the market, you are going to be in problem, because most of the people, most of the retail trader, as far as I know, have shorted the market. Why they have shorted the market? Because every rise in this market is being shorted, and we are experiencing this for a phenomena for a last maybe 3 or 4 days. Every time it touches to, goes to about 22,500, market is coming on the downside. We have seen every time it gaps up, maybe even Friday it gapped up, it came below around 22,350. So if you ask me, or if you ask me what is my perspective, what might happen on Monday, obviously it is going to gap up, there is no doubt about that, but it is going to be a shorting opportunity. It is going to be a opportunity for FIIs or for institutions to bring the market on the downside. Now this is what we have plotted in terms of charting, so that you can understand here. So this is a hourly chart of Nifty, and what you can see here, how beautiful this order block is working, right? So every time we use order block, people ask why you are using order block. In fact, order block is one of the main, is the only indicator we are using. We are not using any oscillators, we are not using MACD, we are not using relative strength index, or for that matter any index, but this indicator is I wouldn't say indicator, this is kind of stuff which tells us what FIIs or what institutions are doing. That is why we are showing some importance to this thing. Now if you can see here, around 25th of March, there is a big green candle. Immediately there is a bullish order block, which means people have institutions have placed huge buy order, and the market rallies to around 22,600 levels or 22,700 levels. Now here they have made a another order block at around these levels, which is around 22,600 or 22,700 levels. So that is where lots of orders, pending orders are here at around this level, at around this 22,700 levels, and we can see that market is coming reversing from 22,700. Again it tries to go above 22,500. Again they are writing. So every rise in this market, so whenever we say every rise is a selling opportunity, why we are saying this is because there is huge order block. People are writing, institutions are writing huge orders on the higher side. So that is why we are saying that it is going to be a rise on a sell on rise market. So that is what is happening now. We have touched the lower order block or bullish order block, which is the support level at around 22,200 or 22,300. If you are watching our previous video, or if you have watched our previous video, we clearly told that 22,200 to 22,300 is very good support. And why we told that is because of order block, because we saw huge institutional activities around 22,200 to 22,300. We were saying there is a huge order block and it might not go on the downside. Now if it goes on the downside, there has to be really good volume on the lower side, and market has to come on the lower side. This order block has to, if this order block has to be void, then there should be a huge volume, sell volume, putting pressure on bulls and market has to come down with a huge volume, like what happened at around 25th of 5th of March, 5th of March, where you are seeing a green candle and market goes till around 22,600. From around 22,000 levels, it has gone to around 22,600 levels. Now you can assume that 22,000 is a very, very good support. Now, let's say, for example, if the market is gapping up on Monday at around 22,600. So 22,600, there is a huge order block or bearish order block, or let's say resistance is there at around 22,600. Now what might happen is that when you try to place an order at around Monday, when the market is at around 22,550 or 22,600, there is already lots of pending orders by institution at 22,500 to 22,600 levels, which means when you place that order, their pending orders will be completed, and your orders will be grabbed, or your orders will give liquidity to them. If you are on option seller, let's say hypothetically, if you are selling put option at around 22,500 on Monday morning, looking at the big gap up, that might be liquidated. Or if you are an option buyer looking at the market, if you let's say if you buy some options 22,500 or 22,600 call option, that might be filled because there are lots of pending orders. So what does that mean? What is order block is that there is a huge pending order. FIIs or institutions have placed a huge pending order at around these levels. So when you place your orders, whether it is buy order or whether it is sell order, that is going to give them liquidity to fill their orders. So what might happen is, instead of market as anticipated, if you are an option buyer, instead of going on the higher side, it may come on the downside. Your stop loss might hit and it might come on the downside. So what I'm trying to say here is, if you are not understanding, if the market gaps up on Monday, there is every possibility for the market to come on the downside. It may retrace and it may come on the downside. Now, second thing is, if you see this chart, there is one more thing you have to notice. But before that, let me tell you one simple one thing, that we have a webinar on 30th of Sunday, 11 a.m. It's going to be about strategies, what we are using, and you are going to get access to 65 plus option trading strategies, and you are going to get access to our traders of premium group of our traders. So this all is going to cost you 500 rupees. It is not free of cost, for which the link is on the description below. If you want, you can join or you can ignore, right? So going back to the charts, so this is what we anticipate. If the market gaps up on Monday, there is every possibility for the market to come on the downside. Now, what if the market keeps on going on the higher side? Let's assume there is really positive news. Donald Trump is not talking about India, and there is really positive news. If the market tries to go on the higher side, there is every possibility that the market may revert from 23,000. That is where people have huge short position. So if this block order or resistance, which is around 22,600 or let's say 22,700 is broken, we will see huge order reversal from 23,000, and it coincides with this trend line which we have drawn few days back. So this is how market works. Now, if that order, if let's say scenario 1 is that it is going to gap up till where it is going to gap up, 22,500. See, if you can see what is happening, if you can understand what is happening in the US future, US market has rallied around 2% to 2.5%, including Dow Jones, S&P, Nasdaq. But what is happening in GIFT Nifty is that, in spite of US market in the bull run, or in spite, I wouldn't say bull run, in spite of US market being in the green, Gift Nifty is not able to cross about 22,600. So why this is happening? That is the main question here. We have to ask ourselves this question: why Gift Nifty is going in spite of US market in the green? Why Gift Nifty is not moving about 22,600? So that is the main question here, right? So with that being said, we strongly believe that it was going to be gapping up at around 22,500 or 22,550 levels. That is scenario number one. Now, if there is really bullish momentum and the market tries to go on the higher side, market may go till 23,000. I'm not going to say it is going to happen on Monday. If it is sustaining about 22,500 or 22,600, it may go and try and touch 23,000. So this is the second scenario. Scenario number 3. Now, if the market gaps up on Monday, but it is not able to hold about 22,500, it will come back to around 22,300, like what is happening for the last 3 or 4 trading session that we have been seeing, right? So let me change it to a 5 minutes time frame, then you can understand what will happen, right? So let the chart load, and I will tell you in the meantime, this guy, whoever is sitting in the US, is a very very annoying person. He has been elected, whether we like it or not. He has been elected, and we really don't know how he is going to react and what he is going to react, when he is going to react. Anything we don't know, right? We are just in between the woods, or in Tamil there is a word called kannakatti kaatala utta mari irukku. There is a quote which says that we really don't know, we are blindfolded in the middle of the forest. So that is how things are working in terms of US market. We really don't know how this guy is going to react, what is going to come out with. Nothing is there is lots of uncertainty in terms of Donald Trump. So that is why we are seeing this kind of movements, we are seeing this kind of volatility in the market. And this is going to continue going forward also. There are lots of talks, there are lots of rumors about recession. We really don't know whether it is going to happen or not. That is why it is called rumors or speculation, right? We really don't know. It is not going to happen. People have been telling for the last 5 years there is going to be recession. I don't see any recession coming anytime soon, right? And people also say that Berkshire Hathaway chairman Warren Buffett has liquidated most of his stock. He is sitting in a pile of $360 billion. And there are lots of conspiracy theory in terms of a recession, so I don't want to go into those things. So we will see what happens to the market. Nothing much to worry. So scenario 1 is, if the market gaps up, we believe it will come on the downside. Scenario 2, if the market goes have a strong momentum, it goes on the higher side, it will maybe touch, if it sustains 22,500, it will go and touch 23,000. And scenario 3, if the market comes on the downside, maybe it will stop near 22,200, or let's say 22,300. And if there is really bad news, maybe top least 22,000 it will stop, is what I believe. So I have talked too much. I will end this video here. I'll see you in yet another video. Till then, take care. Bye.